Hello guys, how are you? I hope you are doing well. In this video, I'm going to talk about some basic terminologies behind the Forex market. Okay, if you are thinking about Forex market or even you are a Forex trader, you need to understand some basic terminologies behind it. Okay, at first, you need to understand the language of Forex market in order to trade in this market. For example, what is bid price, what is ask price, what is base currency, what is quote currency, what is leverage, what is spread, what is PEEP, what is lot, and many other terminologies. Okay? So if you want to learn about this, please keep watching. At first, what is an ask price? Well, the ask price is the price that you are willing to, buy a currency. Okay, always the ask price is higher than bid price. Let me show you on the screen. But before this, please make sure to like this video and subscribe my YouTube channel. In this channel, I'm going to publish a lot of informative videos about Forex market as well as about some other useful topics weekly. So in order to receive notification about my newest video, please make sure to subscribe this YouTube channel and hit on the notification button. Let's jump into it. Ask price is always higher than bid price. So ask price is against the bid price. Okay, in this case, as you can see, this line is ask price. Okay, because it's higher than bid price, so which is 0.68820. okay, so this is higher than bid price, which is 0.68790. okay, so this is lower and this is my bid price. So this means that if I buy $1 Australian, I need to give 0.68820. So for one Australian dollar, I need to give this amount of US dollar. But but look, in the bid price, okay, here, if I want to sell $1 Australian, so I need to sell in this rate against US dollar, 0.68790. okay. What is the bid price? Well, the bid price is the minimum price that you are willing to sell your currency. Let me show you again on the screen in order to illustrate this word for you. Well, what is bid price? As I talked, bid price is the price that you need to sell your currency. Okay, for example, in this case, and also always bid price is lower than ask price. Okay, so as you can see in this picture, let me zoom it. Well, as you can see, this is the bid price. Okay, which is 0.68798. okay, this is the bid price here, and it's always lower than ask price. Okay, so remember this. Now, what is spread? Spread is the difference between ask price and the bid price. Okay, as I talked earlier, ask price is always higher than bid price. Okay, so the difference between ask price and bid price is spread. Okay, and also I have to say that this difference, okay, this pips will be given to to your broker. Let me show you on my computer screen this. And what is spread? As I said earlier, spread is the spread or the distance between bid price and ask price. And this pips, which is the difference between bid price and ask price, will be given to your broker. Okay, because your broker also needs to to live. Okay, to make money. So they can't your broker can't provide free service for you. So this amount will be given to your broker. Okay, what is base currency? Well, the base currency is the first currency that you are holding, okay, that you are willing to to sell. For example, US dollar against Canadian dollar. So in this case, US dollar is the base currency because I mentioned it at first, okay, and Canadian dollar is the uh, second currency. It's also called quote currency, okay. For example, US dollar against euro, okay. Also, in this case, US dollar is the first currency or the base currency, and euro is the quote currency, okay. For example, Great Britain pound against Japanese yen, okay. In this example, also pound is the base currency and yen is the second or the quote currency. Let me show you on the screen. Base currency is the first currency, okay, which other currencies will be judged regarding to that, okay. In this picture, as you can see, Australian dollar is the base currency and US dollar is the quote currency, okay. So this means that for one Australian dollar I just need 0.68820, okay. So this means that if I sell one Australian dollar, okay, which is called ask price, I need to get the, okay, I can't get 0.68820 from the forex market. Also, I think it's worth to mention that majority of the times, the US dollar is the base currency, and this means that the investor judge the other currency regarding to the base currency, okay. For example, they will judge how much, for example, how much euro do they need to buy, for example, $1,000, okay. For example, they may need to 890 euros to buy $1,000. So in this case, $1,000 is always fixed, and they the euro is changing, okay, something like that. Well, what is margin? Well, a margin is the amount of money that you need to invest in order to launch your account. For example, if you, for example, invest $100, so this will be your margin. Let me show you on the screen. Margin is the initiative amount of money that you need to put in your forex account, okay. Margin is the amount that your broker need to launch your real account, okay. So this is called margin. Leverage is the amount of money that you are given by your broker, okay, to to boost your position. Actually, this is not a real money or fake money. This is just boost your position. For example, by leverage, you can control much higher money than your initial money, okay, than your margin. For example, if you invest $100, you are able to trade up to 1,000 or even 10,000 of dollar, okay. Forex market is one of the most liquid market, okay, in the world. Well, what is PEEP? Well, PEEP is the smallest movement of your currency. So, for example, if you open your live account or your demo account, you will see that the market is the price of currency is moving upward and downward, okay. So the smallest movement that will occur is called PEEP, okay. Let me show you on the screen. Well, let's analyze the PEEPs. As I talked before, PEEP is the smallest movement that will occur in your trade. This is also the fourth decimal in many currencies except Japanese yen, which is in the Japanese yen, this is the second decimal, okay. This means that we count after the point, and we consider the fourth number as our PEEP, okay. So in this case, as you can see, 6 6 is 1, 8 is 2, 8 is this 8 is 3, and this 2 is, a pip. So if this 2 change to 3, so we just lose, or profit 1 pip. Okay, and after that, that is called point, and 10 points equals 1 pip. Okay, and what is lot? Well, there are 4 kinds of lot. I think the nano lot, which is $100, the micro lot, which is $1,000, the mini lot, which is ten thousands of dollar, and the